All right, here we are, Thursday, May 16th. Let's go over everything that I've been telling you. We had another normal, I would say, pretty sharp correction in the stock market, which actually began right around May 2nd. And in that pullback, go back, watch my videos. I told you that was temporary, that was an overreaction, that was a stock market correction. The funny thing about that correction was right before it started. Now I'm just talking about sentiment. Now I told you the underlying monetary condition that caused that to happen, right? I spoke a lot about bank reserves and that kind of seasonal window where you had, first of all, the tax collections in April. It drew bank reserves way down. So we had that rally right in April. And then when that hit a trough, when that hit a bottom, when that phenomenon of the drawdown in bank reserves hit a bottom, that had an effect. I said, you can predict the behavior of what banks do with respect to their assets. Now, what banks do with respect to their asset mix has a very powerful short-term impact on the market and its fluctuations, on the stock market, on the bond market, all right, on all markets. Banks have, what, 16 trillion, something around there, 17 trillion in assets. So, I mean, even very small fractional percentage adjustments in those assets have a very powerful short-term impact on the market. So these things are totally knowable in advance. I talked about this. Now, I'm the only one who focuses on this. You won't hear any other economists talk about it. You definitely won't hear the MMT people talk about it. I'm the only MMT guy, by the way, who focuses on this as well. So these moves are predictable. My people have, we trade off of these things. So that was the monetary condition that was in place as of May 2nd, April 30th, May 2nd, to take support out of the market. And the market started to pull back. It was a very modest, normal correction, but then we had Trump announce the tariffs out of nowhere, a big surprise, and then everybody panicked, as they always do, and the market sold off sharply. It got scary a couple of times for many people, not for me, and hopefully not for my subscribers, because I talked to them throughout the day via email or whatever. I was telling them, calm down, it's going to be okay, it's a buying opportunity. So we were buying those dips. But everybody else, I mean, they don't have me, they don't have Mike Norman. If you're not a follower of me, you probably, you listen to the headlines. The media is out there to scare you, let's face it, because number one, they don't know any better, and number two, fear is a great motivator. They're going to be glued on you're going to be glued on their headlines or fixated on CNBC or one of these idiot shows, Fox Business. I worked for Fox for 12 years. Believe me, there's no one on there who knows what they're talking about. They make stuff up. They make stuff up. I mean, there were times that I was on Fox and the producers used to send us, when I was, booked on a show, I was a contributor at Fox. There'd be times like the producer would say, okay, we're going to talk about this. This is going to be our topic. And it was always, I was, in the business unit, so it was always about business or the markets or whatever. And I would say, your data is wrong. If you like, I can show you where to get accurate data. And they'd say, many times, they'd come back and say, no, that's okay. We want to talk about it the way it is. So in other words, it was crafted. A lot of times it was just fake. This is a behind the scenes. I was there. No, it's okay. We want to talk about it the way we want to talk about it. even though I said your data is wrong. I know where it, I could show them from the Treasury, from the Fed, whatever. This is what I do. They said, no, that's okay. We want to say it the way we want to say it. Okay, so you guys think you're getting informed. You watch these shows. I tell all my people, just turn off the CNBC. Turn off the Fox business or anything else. Anyway, that was the monetary condition in place, and then Trump came out. He said, I'm putting tariffs, that's it. I'm done with the Chinese, I'm putting tariffs. Everybody got panicked. They started selling. We were buying into the dip. Now, what happens now? The monetary condition that didn't create the sell-off, but it created the condition where the sell-off could happen. There was less support in the market from the banks doing what they need to do. That goes away soon. Now we know the exact time, we know the exact window. By the way, I have to say, this market rally right now, because we still have that kind of negative monetary condition. So the market rallying right now, in spite of what we still have, which is a little bit of that negative monetary condition, that tells you how powerful the bullish forces are in the market. Once the negative monetary condition goes away, which is soon, you're looking at melt up. As long as Trump doesn't say anything about more tariffs, but that only creates buying opportunities. Many of you, and I had a lot of subscribers who quit back in November and December because they panicked out. They think what I give them in terms of understanding, in terms of knowledge, in terms of market acumen, they view that as wrong or not useful because of their own lack of emotional control. So again, that's placing the blame. They all sold out in November, December. It's no good, it's no good, that MMT doesn't work. I said it again. So the rally now, in spite of this negative monetary condition, which is still in effect until soon, and if you want to know when, you're going to have to sign up. Go to pitbulleconomics.com, sign up for a 30-day free trial of MMT Trade. And by the way, people, you got to know what the big picture is. That is the most useful information you could possibly have. If you know the big picture, everything else can be distilled down from that, and you could make money off. So the rally now, in spite of this negative monetary condition, is screaming to you how bullish the underlying forces are in this market. When this monetary condition flips and turns positive, turns supportive for the market, this thing's going to be a moonshot. I'm telling you. So you could either have that information and understand it, or you can choose not to have that information and just continue to guess or continue to go with the crowd. I talked about that. A lot of people like to go with the crowd because when they go with the crowd, they feel there's safety in numbers. Oh, I'm doing it. Look, they got it wrong, so how can you blame me? I got it wrong. I did what everybody else was doing. Groupthink. Nobody successful in any field went about it via groupthink. The most successful people, entrepreneurs, traders, investors, scientists, are contrarians. Think about it. Copernicus. Everybody was saying the sun revolves around the earth. Copernicus said, no, I think it's the other way around. People say, are you crazy? Look, you can look up in the sky. You see the sun moving. He said, no, it's a matter of perspective. It is the earth that is moving. Can you imagine? That was a heretical statement at the time. He almost got executed because of that. Every great inventor, thinker, trader, investor, scientist, entrepreneur, businessman is a contrarian. But most people, and remember, that's not a large universe of people. The world advances on the backs of individuals, not the masses, but the masses, the people like you, we do what everybody else is doing. because there's safety in numbers. Like sheep. You want to be a sheep or you want to be a wolf. I am an apex predator. I am a wolf in my thinking. PitbullEconomics.com. Sign up today. Bye-bye.